there. We're keeping the Tesla chart up. We're bringing in our traders. John Corpina at the New York Stock Exchange. We can put up also on the screen the largest largest shareholders of Tesla. Now, clearly, you've got Elon Musk, and then you've got the big names here. T. Rowe Price owns about 9%. Elon's got about 20%. Fidelity, 8.25% share. We've got Bailey Gifford has 7.75% of the company. Tencent out of China at 5%. And broaden this conversation to our viewers who don't own Tesla right now.
You know, it's very surprising what we're seeing here that's coming out in Twitter. You know, we've been talking here on the floor of, is this insider information? Nothing has been, disclosed the way normal news disclosures come out. And he's still tweeting as the stock is still halted, which is very interesting. We haven't seen anything like this before. So to see this whole thing play out live in front of us is very interesting and somewhat exciting. But I think this is going to, talk about market structure and how CEOs can use social media to dispense information. But as far as the company is concerned, as your previous guest just said, this might be the best thing for him. Go private. He's used to it under SpaceX. He doesn't have people, not tapping on his shoulder saying, what are you doing now? And doesn't have to answer to the analyst. It seems like his personality would fit a private company better than a public company.
Right, and his latest is on the screen right now. He said Tesla would be way smoother and less disruptive as a private company. Larry, to John's point about how CEOs and companies break news to the markets. You could go back to Reg FD, Regulation Fair Disclosure, that came, of course, after the dot-com bubble burst. And there was no more whispering in certain analysts' ears to break some news about a company. Now they had to put it out there for everyone at the same time so that it was a sort of a fairer landscape for the average investor, many of whom are watching right now.
Yeah, exactly. And I think regulators, all types of regulators, are still trying to figure out how to deal with social media when it comes to equity, when it comes to CEOs of companies tweeting things. And we're in the infancy stage of that. I know I'm on the board of the PCAOB, and we're grappling with these issues all the time when it comes to auditing and auditing standards within social media. And we're in the very early stages of that. And when you have a stock like Tesla with gigantic short interest that it has, something like 34 million shares, much bigger than the stock given its float out there, it's very, very subject to all kinds of volatility when you have people tweeting things.
Right. Yeah. Phil Flynn, the electric vehicle sort of wave was sparked very much in part by Tesla, its initial Roadster, which was the sports car that only seated two. I was in one of them. I never forget this. In 2008, it was the coolest, weirdest thing I had ever been in. No engine sound at all. And now you still have a very vibrant oil market despite all of this. But hybrids have really become de rigueur, and electric vehicles too now.
There really is. And listen, there's no doubt that electric vehicles and hybrids going to be a part of our future. It is. It's not going to replace petroleum anytime soon. But it is interesting that Saudi Arabia is looking beyond petroleum. And King Salman, of course, who's talking about getting his economy off of oil, is looking at this as a small investment as a first step.
That's interesting.
It's a diversification play for them as well. I just think it's an amazing thing, and I think Musk is going to be much better off being private for a while, especially after some of his earning calls.
There's me in the Roadster. Oh, I remember that, 2008. Listen, our thanks to our traders. Ross Gerber, can you stay in the chair because the stock is still hard? I want you to be there when it starts to trade again.